All right, cool. All right, welcome everyone. Thank you for joining us for today's masterclass. I'm James from the Binance Australia team, and we're very happy to have you all here. So just before we start, we're going to get straight into a disclaimer for this one. So this masterclass has been prepared for informational purposes only and is not intended to provide and should not be relied on for tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. So for today's masterclass, we have invited our friends from Koinly. So let's welcome Robin and Michelle. Robin is the founder and CEO of Koinly, a cryptocurrency tax solution that helps Bitcoin investors generate their capital gains tax reports. He has a decade of experience working in the fintech industry and extensive knowledge of cryptocurrencies, smart contracts, and their tax implications. Michelle heads up at research and content at Koinly. Michelle will be running a presentation covering our presentation covering crypto tax in Australia, how to generate statements from Binance, and how to navigate on myTax to report your crypto investments. Robin will join the Q&A session after Michelle's presentation, just so you're aware. So Robin and Michelle, would you like to say a few words to introduce yourself?
Yes, thank you very much, James. Hi guys, I'm Robin. I'm the founder of Koinly. So one of the biggest challenges with crypto is undeniably doing your taxes, especially if you trade it on multiple exchanges or wallets, or if you just have a lot of transactions. And keeping track of all that activity, figuring out your capital gains at tax time can be very difficult. And this is why we built Koinly, to make sure no one has to spend another hour figuring out how to do their taxes. In this masterclass, we will show you how you get from knowing nothing about crypto taxes to becoming a crypto tax pro and filing your taxes with the ATO. Over to you, Michelle.
Yeah, thanks, guys. We're just about unnaturally enthusiastic about crypto tax. So it's really our passion to get this stuff right. And I think to make sure that everyone in the community understands what they're up against, and really helping to simplify the tax concepts as much as possible. So that's our mission. So we're happy to be here today to do that for you guys.
Awesome, thank you both. So for today's masterclass, everyone who registered on Eventbrite and submitted their questions will receive a 20% discount from Koinly. We're also going to open that up to anyone who's attending via YouTube Live as well. So if you just stay around to the end, we'll give you that code and you'll be able to sign up to Koinly and get that 20% discount to do your crypto taxes and capital gains tax. All right, so Michelle, would you like to get started with your presentation?
Yeah, thanks, James. So like we just said, we're all about crypto tax, and Robin introduced Koinly, but let's just have a quick look at who we are. So we're an online software company that helps people do their crypto tax. We offer global support with the tax report for every country, including Australia, New Zealand, UK, and the US. Koinly works by connecting with over 300 wallets and exchanges to track all of your crypto trades in one place, and then calculates your gains and losses in a straightforward tax report. So we're fully ATO compliant and up to date with Australian tax law, but we're not CPAs and we're not lawyers. So the information we share today is of a general nature only, and as always, consult a professional if you need tailored advice. Cool, so today's class has 3 sections, and it's going to give us a full picture of how to do our Australian crypto taxes this financial year. So first we'll run through the crypto tax rules as per the ATO. Then we'll look at how to connect your Binance accounts to Koinly to get these trades tracking and into a report. And finally, we'll show you how to actually do your tax return using the ATO's myTax. Right, so let's kick things off with the ATO's tax rules. And the first question is, does the ATO know? And the answer is they absolutely do know. They've been collecting bulk records from Australian cryptocurrency service providers for some time now, and they're taking preemptive action. So you may have received a letter last year where the ATO was targeting crypto traders. And at this stage, they're really trying to empower investors and make sure that they know they're compliant. But I think that message is changing. So this year, you'll see pop-ups if you're on myTax filing away. So the ATO is looking. They will be able to data match and find discrepancies, say, between your bank and what you lodge. So filing your crypto taxes is absolutely something you have to do. All right, so onto the rules. So in Australia, crypto is seen as property and as an asset for tax purposes. That means that crypto is not a currency, but an asset. So like shares or investment properties or antiques, like assets we're already familiar with. So if you're trying to wrap your head around crypto from a tax perspective or doing your own research or tax planning, it really helps to think of crypto as a share. So if crypto is an asset, then just like shares, crypto profits are liable for capital gains tax. So you're pretty much looking at capital gains tax anytime your crypto changes ownership. And this is the key concept to really understand. We'll get back to this. So crypto can also be viewed as income and then taxed as income tax. So crypto as income is something that you receive or earn, and this is different to crypto as an asset, which is something that you own and that has value. How you're taxed depends on the reasons you're dealing with crypto, your operational setup, and whether you're a trader or an investor. So are you a trader or an investor? So it's really important to be clear on where you stand in the eyes of the ATO. The goal of an investor is to gradually build their wealth over time through the buy and hold of a portfolio of investments. This could include crypto. These are typically individuals like you and me, and we're looking to see a return in the long run. Traders are often businesses. They're buying and selling all the time. They're looking for quick wins, and they'll have more short-term gains. So the key thing is an investor is taxed mostly under capital gains, while a trader is taxed mostly under income tax. And the benefit for investors is they can access what's known as a capital gains discount, whereas traders cannot. And this is really the tension that we have to get around. So let's dig a little deeper into the types of taxes that crypto can see. And we'll start with tax-free crypto, which sounds good, right? So the great news is buying crypto is completely tax-free, and that includes GST. So buying crypto is tax-free, as it should be, since it's an asset, and you only get taxed on assets when you dispose of them or get rid of them or sell them. We'll come back to that. So the same goes for if you're receiving crypto as a gift, that is tax-free, as well as if you are moving your own crypto between wallets, so say from your Binance to your CoinJar accounts. Token address changes are also tax-free. If your project launches from testnet to mainnet, no tax. The same thing for getting crypto through hobby mining, so hobby being the keyword, and we'll come back to this. No tax on that. And then chain splits are tax-free too. Another one is when you are using your crypto as a personal use asset, and we'll come back to that, that could be tax-free. And then lastly, donating crypto to a registered charity is tax-free. You may even claim this donation as a deduction on your tax return, so it's a win-win. Right, so that's the general picture around tax-free crypto. Now let's look at crypto as income. And for regular investors, it's not something that's going to be happening all that often, but there are at least 5 plausible possibilities. So you could work for a crypto-based company, for example, that chooses to pay your salary in cryptocurrency. This would be treated as a salary sacrifice arrangement, FYI, but it's totally valid, and your crypto salary will be put forward as your ordinary income for the year. Another way is through staking. So maybe you're staking in a Binance Ether staking pool and you're earning block rewards. This is seen as income by the ATO. The same goes for any new tokens you might receive through airdrops or DeFi interest. Both are income. And lastly, any referral fees or bonuses you might earn that are paid in crypto is also seen as income. So like Binance's referral program, where you're rewarded in Binance Coin for bringing in new signups. This is income, and the value in Australian dollars at the time of acquisition needs to be entered into your tax return. So these are the basic rules around crypto as income for investors. Next, we'll have a look at capital gains tax. So capital gains tax is the big one to get right and really understand. And the trick with capital gains tax, or CGT, is to know that every time your crypto asset changes hands, so if it's sold or swapped or given away, you're going to be up for capital gains tax on the difference in value from when you first got your crypto to when you let it go. So in that moment of movement. And this movement is called a disposal. And it's the key concept to remember when you're thinking about capital gains tax. So we're going to come back to the different types of disposals. But first, it's really useful just to cover off what a capital gain actually is. So a capital gain in crypto is the same in any class of asset, like a share. The gain is the difference in value from when you first got your crypto to when you sold it. Now, you'll make a capital gain if the proceeds from a disposal is more than what it cost you. And this is known as the cost base. We'll come back to that. So here we have an example of a sale of $1,500 minus the initial cost of the crypto at $1,000. And so the gain is $500. Right, so know your cost base is very important. But what exactly is it? So to work out your cost base, you'll add the cost of the crypto you bought and any fee that was involved in the acquisition. So that might be a brokerage fee or a transaction fee. So here's an example using round numbers and not market value. If you buy 1 Bitcoin for $990 with a $10 transaction fee, your cost base is $1,000, and this cost base will be the baseline from which you measure any future profits. Right, so we know what a capital gain is, but what will you actually pay? Well, anyone who's ever had a job knows that your salary is taxed depending on where it sits on the ATO's income tax rates. So capital gains tax works the same way. The rate you pay depends on the salary band you're in. So what would the capital gains tax be on that $500 we made earlier? Well, let's say you earn $100,000 annually as your salary. You'd fall into the third tax bracket where you pay a capital gains tax of 32.5%. So on a $500 gain multiplied by 32.5%, you'd arrive at $165 owed to the ATO. Now, this example doesn't factor in the Medicare surcharge and any other adjustments which would be personal to your tax situation. And you'd probably see an increase slightly, but this is a pretty good example of base tax. So now this tax could be halved if you held for a year or more before selling. So this is called the capital gains discount, tax discount. So by holding, you're rewarded with a 50% reduction on the tax you owe. And obviously traders are jealous of this discount, so hodl on. And if you made a loss, well, you can use your capital net losses to reduce overall capital gains made in either the same financial year that you're lodging in or in future financial years. And a crypto capital loss can be applied to investments that aren't cryptocurrency related. So you could offset, say, shares or property gains. So always report any capital loss in your tax return so you have it available for future investments. Right, so let's look closer at capital gains, and really it comes down to these 5 events. So you're up for capital gains when you sell your crypto, when you exchange your crypto for crypto, when you convert your crypto into fiat, when you gift your crypto, and when you spend your crypto. So let's look at selling crypto first. And so here we're going to have to pay capital gains when we sell. And that's just how it is. The gain or loss comes down to the difference in the crypto's value at acquisition compared to the crypto's value at disposal in Australian dollars. So the Australian dollar value versus when you got it versus when you sold it. So here's an example. Craig purchases 1 Bitcoin in January for $1,000, amazing, at a fee of $100. So his cost base is $1,100. In May of the same year, he sells his Bitcoin for $2,000 at a fee of $100 again. So from his initial Bitcoin buy, he can now afford $2,000 in essence. His capital gain is the new value of $2,000 less the cost base of $1,100 and the new fee of $100 to arrive at a proceed of $800. And it's this amount that he would be paying capital gains tax on. So equally, if you're converting your crypto into Australian dollars, it's the same as selling, basically. You're disposing your crypto for any fiat, dollars, pounds, and this would trigger a capital gains event. So the cost base here is the fair market value in Australian dollars of the crypto at the time of acquisition, plus any costs involved like fees. So here's another one, and it's tricky. It seems like it shouldn't be taxable, but if you're trading crypto to create a crypto or swapping or exchanging, it's also a capital gains tax. It's pretty much the same as selling. So any gains you've made, even though you don't see a dollar in your hand or on paper, is still a capital gains event. The ATO sees this as using the dollar value of an asset to acquire another asset of value. So in this example here, if Kim swaps $1,100 worth of Bitcoin, and this includes her original purchase plus $100 fee, her cost base, she swaps this for $4,000 worth of Ether, the proceeds, although a dollar was never seen, is $2,800. And this is what she's up for at tax time. So be really careful with your swaps. Same goes for stablecoins. If you're investing in Binance USD, for example, the ATO views stablecoins the same way as crypto. So you're up for tax for capital gains tax. And then gifting. So unfortunately, if you're gifting crypto to anyone, it's a disposal and you need to pay capital gains tax on the difference in value again. So just a reminder that if you're receiving crypto as a gift, you're good, you're all good, until the time that you decide to dispose of your crypto gift. So in the story here of Jeff giving his mum Bitcoin for Mother's Day, he pays capital gains, even though he's giving the asset away and he hasn't seen a cent in return, but he's earned brownie points, right? And that's the way I rationalize paying crypto gift tax. You're paying for the brownie points you earn. So hopefully that helps. And then finally, the personal use asset rule. Now, this is a way for people to buy assets that they don't need to pay capital gains tax on later. So say your personal car or a washing machine or a PlayStation, if it's for personal use and the value of the item is under $10,000, you could claim the asset as a personal use asset. Now, this is exciting for crypto investors because there's obviously a lot of things online that we could buy and maybe dodge a bit of capital gains tax. So crypto can be seen as a personal use asset. The thing is, the ATO wants to know that you're using that crypto very specifically for buying whatever it is that you're buying for personal use. So there's two examples here. In the first one, Jane wants to get a good deal on a new device sold by a site that offers a 10% discount on crypto payments. So she buys $1,000 worth of Ether specifically to buy that device on the same day. Under the circumstances in which Jane acquired and used the crypto as a personal use asset. It's a different story for Kevin over here, who has been regularly keeping crypto in a wallet for months. He's an investor and he sees the same deal online and he wants to basically buy through crypto and score a personal use asset. But he cannot because he has held his crypto as an investment and the ATO will not see that crypto as a personal use asset for that reason. So if you're trying to jump through this particular hoop, it's definitely worth working it through a tax agent. If you've been holding your crypto for some time, you're probably not going to be able to use it as a crypto, as a personal use asset. All right, so the final thing around capital gains taxes and losses is if you lose your private keys or your crypto is stolen, you may be able to claim a capital loss. So to claim a capital loss, the ATO will require you to provide evidence such as the amount of crypto you lost, your wallet's address, private key, etc., all the details. Again, really good to have a tax agent help you out if this is a place you find yourself in, unfortunately. All right, finally, I just wanted to come back to the mining question. So if you happen to be involved in any mining, maybe you've joined a pool and you're operating as a hobby, the ATO has really good lines around what a hobby is in terms of mining. Then the mining rewards you receive are not income, but assets, and you'll be up for capital gains tax when you dispose of your tokens. So I just wanted to come back to that point. You can't claim any expenses if you're mining as a hobby. And of course, this is very different if you're trading. Here, the ATO would see you as earning income. So there is a lot of information on this difference if you are sort of sitting in the middle of that position. All right, so the final thing here is that as with any tax situation, any good bookkeeping, you'll need to keep records for at least 5 years. And this is detailed stuff with crypto. It's dates of acquisition, dates of disposal, its value in Australian dollars converted from USD. So a lot of information needs to be kept, and that's why even the ATO recommends using a crypto tax software to track everything, like Koinly. All right, so that is the rules and the various ways in which you can be taxed. So in part 2, we'll look at how to actually get sorted for your tax return. So we're going to look at the first part, which is using Koinly. To get started with tracking, you'll need to sync all of your wallets and exchanges with Koinly. And so this can be done once you have an account. This could be done in stages. So as you acquire new wallets and exchanges, you could keep adding them in. But basically, the process would be to just grab all of your various wallets and sync them. Now, the same goes for Binance. You'd connect your account to Koinly, and this could be done through 2 ways, either through the API integration or through a CSV file upload. So we've actually gone through the steps for you. I'm going to hand over to my colleague, Nelly, who does all of our YouTube content. So let's let him explain this to us.
Hello, my name is Nelly, and today I'll be showing you guys how to connect Binance to Koinly via the API. Once that's done, Koinly will then import all your transactions automatically and make it very easy to calculate your taxes. Okay, so the first step is to log into your Koinly account. Once you're logged in, click on the Wallets page on the top of your screen. Then click Add New Wallet and find the Binance wallet. Select the Setup Auto Sync method. Once you've selected that, it will ask for an API key and API secret, and I will show you exactly where to get those from Binance. Alrighty, heading over into Binance, on the top right corner of your screen, you will see a small icon which will take you to the API management page. The API key that you're creating requires a name. I usually give it a name like Koinly. Once you have the name, Binance will ask for two-factor authentication, so make sure to have your phone around and your email logged in, ready to go. Once you have entered both of those codes, it will take you to the actual screen where you can copy and paste the key and the secret. One small note here is for the API restrictions, make sure Enable Reading is the only one selected. That's the only one Koinly actually needs access to. Okay, once you've copied both of those codes, select Secure Import. Now, this sync process may take a few minutes. That's perfectly normal. Once Koinly and Binance are connected, you might notice a small yellow circle next to the Binance icon in your Koinly wallet. Don't panic, this is actually perfectly normal. You might have something along the lines of Xcoin and Ycoin balances do not match what you actually have in the wallet. Click for more information. Once you click on this yellow circle, if the numbers you see are very small, that just means it's a rounding error and you can proceed on to the next step, and hopefully you're done with your Binance setup. However, if the differences are very large, it's possibly due to the fact that the Binance API doesn't actually include all of your transactions. An example of this could be if you bought or sold using fiat. To fix this, I would like to direct you to another video where I show you how to import CSV files, which include your entire transaction history. That video can be found in the top right corner of this video. As always, if you have any questions,
Right, so that's looking at the API integration, and as mentioned, there can be some limitations. For example, if you've bought and sold using fiat. So in cases like these, CSV method works really well, and you can upload any wallet CSV data to Koinly. So let's just check out the situation for Binance, and I'll hand it back over to Nelly.
Hello, my name is Nelly, and today I will show you how to connect Binance to Koinly via the CSV file method. Okay, just like before, to start, we log into Koinly, go into the Wallets page, and add the Binance wallet. Unlike the other video, here we want to click Import from File and add the CSV file. Okay, so how do we actually get this file? First, we have to log into our Binance account and click on Wallet and Overview on the navigation bar. From there, we click on Transaction History. Now click on Generate All Statements. On the range, select Customize and Enter. Then start and end date in 3-month intervals. Click on Generate, and you'll have to wait a little bit for the report to be generated. This could be anywhere from a few minutes to a few hours. Repeat this export until your entire Binance trading history is downloaded. Then upload these files into Koinly. The files will be in a zip format, so I will leave a link to a website where you can unpack for free. And there you have it. Unlike the other Binance video, you won't have any yellow circle since you've uploaded all your transactions. If you still have a yellow circle, click on it, and the numbers you see for the Differences tab should be very small. These are usually related to rounding errors, and it's perfectly normal. As always, I hope you found this video very helpful.
Thanks, Nelly. So that's it. Next, we're going to look at the process of actually downloading your Koinly report. So once all your wallets and exchanges are tracking, you can very quickly gain your report from the Koinly dashboard. And I'm racing through the video here, but essentially you would download the report known as ATO report, myTax, and that's going to give you your data in a format that is going to be really super easy to use for tax time. So just looking through the example again, you'll just check through your settings, make sure your home country is Australia, your base currency is AUD, and downloading that report, ATO report, myTax is the one you want to look for. And here's a quick shot of the report. As you can see, there are some summaries there, and there is detail, obviously, as well included in the report. So the next thing we want to look at is how to actually file a tax return. How do we do this? So The good news is that your Koinly report has everything you need to file with easily, including itemized transaction detail. And the data is good enough for a tax agent as well as for the ATO if you should be called up for an audit. So that is great. Now, how you submit your return is really up to you, but we recommend filing with a tax agent if you've done anything really interesting in the last financial year. So if you've made any significant gains or losses, or if you're not sure if you're an investor or a trader, maybe you've lost your crypto, these would be instances where a tax agent would be a good call. So what we'll do next is have a look at how to file through the ATO's myTax. So this is going to be a way for you to file on your own, and you'd use your Koinly report to do this. So I'm going to hand back over to Nelly, who's going to narrate for us the steps.
Hello, my name is Nelly, and today I will be showing you guys how to do your crypto taxes online. So this is a video for mostly the Australian audience, so I hope you enjoy it. The first step of this process is to file your taxes online. You have to log into the ATO's myTax from the MyGov website as shown on screen. From myTax, head to Manage Tax Returns. Alrighty, from here on out, you're going to select the option for 2020-2021 return and follow step 1 to ensure that your contact details are up to date. After that, just as important, go on to step 2 and check that your financial institution details are correct. Alrighty, then on to step 3, where you need to personalize your tax return form by making a few relevant updates such as your marital status and other information. And, very importantly, select these 3 options to cover your crypto activity. The first being the capital gains or losses you've made from crypto. So, for capital gains, check the box for you had Australian interest or other income or losses, partnerships or trusts. From there, select capital gains or losses that are not from a managed fund. You might have made income from crypto, so if you see income on your Koinly report, be sure to check the box for you had other income not listed above. And finally, the third selection, check the box for deductions you want to claim. Here, you want to check other deductions. Later, we'll add related costs like the Koinly plan you're using for this video. Now, your form is set up to enter the totals from your Koinly report. So, on to step 4. Start with the capital gains or losses section first. Under the total year capital gains, we can put $5,000 as per Koinly report. This takes into account any trading fees. Now we can put in our net capital gains. Over on the Koinly report, we see a net capital gain of $4,500. This is your total capital gains minus any losses. And in our case, we can see $500 of capital losses. So $4,500 is our net capital gain. Now, if you held your crypto investment for more than 12 months, you may be eligible for a long-term gains discount. This gives you a 50% capital gains discount. Apply this discount to your capital gains minus any applicable capital losses, and that will be your net capital gain. In this example, as there were no short-term gains, as per the report, the net capital gain is $2,250. So, over in myTax, we'll add $2,250 as our net capital gain. If, for example, we made a total loss, we would have entered it here under net capital loss. And finally, to wrap up the capital gain section, we select no to additional discounts. So now, on to our crypto income, if we made any, of course. And looking at our Koinly report, we can see some income was made from airdrops. So to add this, select other income, and then select any other income, and then select other once again. For the description, we'll use airdrop, and the total there on the Koinly report shows $44, so we'll enter that and click save. Now we can move on to possible deductions directly related to your crypto gains and income. As per our Koinly report, we see a total of $11. These are transactions that have been explicitly tagged as costs by the account holder, but it's always best to check with an accountant on what's deductible and what's not. So to add this expense, we'll select other deductions and then deductions related to financial investments. Add in the description and the total amount from your Koinly report, so that's $11. Still, in the other deduction section, we can also claim the cost of the Koinly plan. This would be labeled as other deductions as well. Add your description and remember to convert the cost of your Koinly plan from US dollars to Australian dollars. So on the day the $49 plan was bought, that was 58 Australian dollars. So we'll figure that in. And there you have it. Once that's done, you've covered off all the requirements for your crypto activity. From here, you can check off all the usual requirements and submit your return once you're done. And as always, if you have any questions, you can leave them down below, or you can visit our forums. But if you found this video helpful, consider dropping a like, subscribing for more crypto content, and I'll see you next time. Peace.
Awesome. So hopefully that gives you a good sense of how easy it is and how quick it would be if you had your Koinly report in front of you. So the last thing we're going to have a look at is just some strategies around saving tax and also just thinking about your investment tactics from the tax perspective. So the first thing is to limit your crypto swaps. Now that we know that swapping crypto to crypto triggers a capital gains tax event, be really tactical with those swaps. The next thing would be that if you're starting to move like a trader or you're sort of sitting in between, open up a separate wallet for those quick buys and sells, and this might just help you in the long run. So keep them separated. And the next is to think about your crypto losses strategically, use them against your gains, and of course you can apply them against non-crypto gains. Of course, you want to hold. This is going to be a no-brainer. So, hang on for 12 months before you dispose. The next one is to keep records of fees and trading expenses. So this is just so that you are always evaluating your proceeds off the correct cost base. And the last is to remember that you can donate your crypto if you need to make a deduction. So this might be a last dash 28th of June event, but keep it up your sleeve. So that is actually it from me. Lots of information. Everything will be uploaded after the webinar. So I'll hand back to James and the team.
Cool. Thank you very much for your presentation, Michelle. It's great to have a step-by-step guide we can follow to report our crypto tax investments. So yeah, we're very grateful. If anyone needs to revisit this when you are filing your tax, maybe later tonight or over the weekend or whenever, the recording will be available on the Binance Australia YouTube channel. So make sure to rewatch that one there. So now we'll move across to the Q&A session. So we'll invite Robin back on. So thank you for joining us again. I've got a bunch of questions asked previous to the masterclass that we're going to go through here. We're going to tackle some of these. So I'm just going to get straight into it. So number one, is the tax report without subscription accurate?
Yes, so Koinly is free to use, and you can import all of your data. You can import up to 10,000 transactions on the free plan. Once you've done that, Koinly will calculate your gains and show you your total capital gains or losses. Now, this is a complete sort of summary of your gains. If you want to file with the ATO, or in case you're audited, then you are going to need to purchase a tax plan in order to download a complete tax report, which contains everything you're going to need in order to file. And yeah, like I said, like in case you're audited, like that is all you need in order to show that you have been compliant.
Excellent, thank you. So number two, can we use Koinly report and send it to our accountant?
Yes, so that's the beauty of a Koinly tax report. Like you can use it to file yourself, or you can work with an accountant. We have a report called the complete tax report, which has everything your accountant needs to verify Koinly's calculations and file on your behalf. We actually have accountants in Australia already using Koinly to file for their clients.
Great. Can you sell your cryptocurrency at a loss on the last day of the financial year, then buy back at the same price the next day, then claim your losses in your tax report for that year and possibly carry over into the next year? Would that work?
The thing is, it wouldn't work because ATO has this rule called a wash sale, and this would be classified as a wash sale because the only reason that you are selling is in order to claim a loss, and that is not allowed. Now, the thing is, the ATO doesn't have any sort of hard and fast rules on how long you need to wait. So, for example, other countries like the US or wherever you have wash sales, they normally say that you need to wait 30 days in order to buy that coin back. Otherwise, it is not considered a loss. But in Australia, you could buy back the next day, and even that may not be a wash sale, or you could buy back after 30 days, and even that might be a wash sale. Now, it comes down to the reason. Why are you buying back? Like, was the intention simply to claim a loss, or did you have FOMO because Bitcoin's price started going up? So if you are asking this question, then it is probably a wash sale, and the ATO will not allow you to use the losses. But if you are, just trading regularly, and this, happens to be the case, then that is probably fine, and it wouldn't be called a wash sale. But this is something that you really should check with an accountant if you made a lot of losses as a result of these wash sales.
Excellent. Thank you. Very detailed answer there. So do you have to pay tax if you've lost money? Do you have to submit crypto tax details if you've lost money? Same.
Yeah, so I mean, that sort of depends. Like, did you lose the money or did you make a capital loss? Sometimes you might lose money but still end up with a capital gain because of how the taxes are calculated. Like, every crypto to crypto sale results in capital gain. So if you exchanged Bitcoin for Ethereum when the prices were high, then you likely realized a profit, even if Ethereum is now worth a lot less. So you might have a profit to declare even if you've actually lost money. And even if you end up making a capital loss, it is always a good idea to declare that, because you would be able to claim that the following years when hopefully you make some profits.
Yeah, it's always smart to carry over those losses. So how does Koinly handle DEX CGT events such as buying and selling on PancakeSwap? And how to use Koinly with DeFi platforms like PancakeSwap in Binance Smart Chain? Sorry, there's a bit more to that.
All right. So yeah, I mean, that's really simple. Like, all you have to do in Koinly is create a new wallet, create a new Binance Smart Chain wallet, enter your Binance Smart Chain address, and hit the import button. Koinly imports everything. It imports all of your decentralized exchange transactions, and it figures out the capital gains on that. So there is no need to try and export data from PancakeSwap or anything like that.
No, awesome. Yeah, I've used it myself. And it's not just Binance that you can import. You've got all the different wallets there, all the Aussie exchanges, everything covered. So another one here. Do I have to up spot margin earn?
I'm sorry?
So I've got one here that's asking, sorry, I must have lagged out a bit. Do I have to upload separate files for each of my wallets I use on Binance?
Yes, so Binance provides you with a transaction history, for each of the accounts that you have, and you could, use that. You could download for, every Binance account separately, but it's easier to download the statements that they've now allowed you to download. You need, it's limited to a 3-month period, so you will need to download multiple statements, but the statements include all of your transactions across all Binance wallets. So that is the easiest way of importing data into Koinly from Binance.
Great, thank you. So if you transfer coins to your wallet from an exchange, how is this tracked for tax purposes?
So the important thing, if you have multiple wallets, is to connect all of them. Because Koinly needs a complete picture of all of your movements, all of your transfers, all the deposits and withdrawals, in order to figure out what is taxable and what is not. So it's going to see that you are withdrawing something from Binance, and you're receiving that maybe on the Binance Smart Chain, and then it connects that. It knows that this is a transfer, and it doesn't make that a taxable event. So just make sure to connect all of your wallets, and everything else is handled by Koinly. And of course, transfers are not taxed, so they are tax-free.
Okay, great. Good to know. Can you alias wallet addresses that aren't automatically labeled to make it easier to classify/sort transactions?
So if these wallet addresses belong to you, then you need to add those addresses as separate wallets into Koinly. But if they belong to somebody else, then you won't be able to alias them. But this is something that has been requested, and we are working on adding support for contact lists. And once that is out, you will be able to alias all these addresses, and it'll make it easier to sort transactions and filter transactions as well.
Great, thank you. Next one, if your account is overseas based, do you pay Australian taxes? And is it worthwhile setting up a trust account to manage profits?
So this is a tricky one. So Koinly would help you with calculating your capital gain or loss. But actually, how you go about filing that and setting up trusts and all that, this is something that you should really check with an accountant.
Great. Here's a good one on security. So can you please explain the security implications of providing Koinly with access to the Binance API so that you can automatically generate myTax statements?
Okay, yeah, sure. So API is a very safe way as long as you give it only read-only access. And that is all Koinly needs. Like Koinly needs access to your transaction history. It doesn't need access to move your funds. So, create an API key. Normally, by default, only the read permissions are selected, but it's always good to double check. And another thing to keep in mind here is when you're creating an API, then you'll get an API key and an API secret. And you need to add both of those into Koinly. Like the secret does not give us access to your funds. The secret is just a way to, grab your transactions from Binance.
Great, thank you. I think we may have covered this, but does your calculator integrate transactions through an upload from Uniswap, Paraswap, Xeron, PolkaSwap? How?
Yeah, so like with the previous question, all you have to do is, if you are trading on Uniswap on the Ethereum blockchain, create an Ethereum wallet on Koinly, add your public address in there, and Koinly will import all of your decentralized exchange transactions, any liquidity transactions you have, staking, whatever, everything gets imported simply by adding your address. You don't need to export data from Xerion or PolkaSwap or anything else. Just the public address, that's all that's needed.
Excellent, thank you. Does your automated calculator apply a 50% reduction of capital gains to each portion of my token coin asset that I've held for more than a year?
Yeah. So, every asset that you have is kept in a separate pool. So if you're buying and selling Bitcoin, that is different. The gains you'll have will be different from, buying and selling Ethereum. So, and the capital gain reduction is applied to, any coins that you held for at least 12 months. And this is all done automatically. You would be able to see that in the complete tax report that Koinly shows you. It probably won't show up on the tax summary page that you get on the free plan though.
Okay, cool, good. Noted. What is the best way to include crypto mining pool fees in your tax return? Does Koinly have a tool to include this?
So if you are trading on, something like NiceHash or, maybe even Binance mining, then, all the pools will get imported automatically using the API or the CSV files, and they will get tagged as costs. And then you might be able to deduct those costs. So ATO doesn't actually allow you to deduct a lot of, costs if you are mining. So it's best to check this with an accountant, but Koinly can definitely handle it. And you would also be able to tag any such, mining pool fees manually yourself by going into Koinly and, tagging it as a cost. And then that will show up on your tax report.
Brilliant. Got a fun one here. What are the key advantages of using Koinly over other major competitors?
Yeah, good question. So we were founded actually 2 years ago. So we are quite new. And at that time, we already had a lot of competitors. But those competitors were quite difficult to use and the integrations were outdated. Like the best one at that time had around 10 integrations. And if you had any other wallets that were not supported, you had to do a lot of work manually. So that is, what we have decided to simplify. Koinly makes it as easy as possible to do your crypto taxes. Like our aim is not to be, simpler, easier to use than, for example, a spreadsheet. Our aim is to be the simplest possible solution for doing your crypto taxes. And the main way of doing that is by adding support for a lot of integrations. And that is why right now, even after 2 years, we have over 600 integrations, more than any competitor. We also have support for Binance Smart Chain, Polygon, XDAI, and liquidity transactions. And we were the first to add support for most of these. And like new integrations added support for almost every week. Our tax reports have also been audited by tax agencies in multiple countries, so not just in Australia, but in the US by the IRS and by many other tax agencies. And we also have a lot of accountants that are using our platform. So if you're using Koinly, you can be sure that the calculations are right.
No, yeah, great. No, so for professional standard, I used it last year, so personally. So yeah, I've done my taxes. So let's move to the next one. What is the easiest way to save on taxes?
So the easiest way is actually to file when you are making losses. That is the easiest way. A lot of people neglect that. They think that, they've lost money and, they don't need to file, but actually you are making a big mistake. So always file if you make losses, because whenever you, like for example, in the next year, if you make a profit, you will be able to reduce that profit and pay less tax. So that is, the simplest way of saving your taxes, simply by filing.
Excellent. That wraps up our Q&A session. So thanks again for the masterclass tonight, Michelle and Robin. I really appreciate it. Would you like to let the people viewing know where we can find you guys at? Or
yes, so our website is koinly.io. We have added a link in the YouTube video, so you'll be able to click on that and see the website. You'll be able to try it out for free and see how it works.
Great, easily. Before we finish up, we'll let you know what the code is. So when you're signing up to Koinly, you want to be using Binance 20. So that's Binance 20. So not in words, use the numbers, Binance 20. You should be able to find it in the description after this. And those that registered will also receive an email regarding sign-up codes. But also please make sure to use these before the end of July, as they will expire at this point. So please make sure to like and subscribe to our Binance Australia YouTube channel and join our Telegram to come hang out with me and the Binance Australia team. Would you guys like to finish up on anything at all, Michelle and Robin?
No, thank you very much for inviting us, for giving us the opportunity. And it's been a pleasure being here.
Yeah, thanks, guys.
No worries. Thank you. It's been awesome working with you guys over the last couple of weeks, and hopefully we can make crypto tax in Australia easier and easier over time. So thank you everyone for joining tonight. Appreciate it.